All right. Hopefully there's volume here. I'm flying blind. Let's see here. If you're online and in the comments section, say, hey, yeah, Ernie, I can hear you. Otherwise say, hey, no, Ernie, I can't hear you. Of course, you would never know that I'm asking you to say that. So what I need to do is another way. And the reason why I am up in the air. All right, so we're getting some thumbs up. Get the more thumbs up. How you doing, friends? Good. That's what I needed. I needed that first person to come in and say, yeah, sounds good. Let me fill you in on what's going on. Yesterday, I did the show from the billiard parlor, which is way over there, right? And today, and the reason why I did it from over there is that I was just totally rewiring my entire setup. I got a new 10 gigabit Ethernet switch so that I can have really fast connection with my NAS, which is a network available storage. When you're doing YouTube videos like this, the videos, they get really big. And so you need huge amounts of storage. And I have a few different workstations that I work from. So getting that fast network switch was really key. All right, so I put it in there, and it's a great switch. It's super fast. 10 gigabit ports and everything. Do I need 8 ports? No, not really. I just need really one going to my NAS and one going to my main editing station. But I got 10 because I figured, hey, I'll get 10. I'm a man, I'll get 10, where I only need 2. Okay, what I wasn't really planning on was the incredible noise that it creates. It's like a tornado. And if you listen closely, while I'm not talking, you'll hear it. But it's incredibly annoying when you're trying to do some video edits and that thing is just going off. Oh, it's horrible. So it's, and especially if you're doing podcasts, that's all anybody would ever hear. All right, here, we'll listen for a little bit. It's not whirring right now. It's a drone, but every once in a while it goes, all right. So I ordered a new network switch. Now this new one has just 2 ports and no fan. And so that's going to be completely silent operation, and I won't be going nuts. And it's only the 2 ports that I need, like I said, going from my NAS to my editing station. All the other stuff doesn't really need 10 gigabits. All right, so now that you know all of the backstory, let's see, Max says, I feel you. I'm an audio engineer and deal with the same thing from my Mac fan. From your Mac, really? Because I don't have, now, maybe from an old laptop. That's what I'm thinking. But I never heard anything come from any iMac that I owned. But now I have a studio Mac here, and I have a Mac Mini. They're both on machines. They make no noise at all. I have 2 studio displays in front of me, and they make no noise. I'm assuming they have fans in them. I'm told they do, but I've never heard them. The only thing that really makes noise is my video switch, which is a Black Magic, but it's pretty quiet. And the NAS has a little fan in it, but you hardly ever hear that either. But this NAS, this network switch, God, it is so friggin' loud. Oh, the dreaded 2019 laptop. Oh yeah, my son bought a 2019. I have one of the new ones. They are fantastic. What a fantastic machine. So anyways, enough about equipment. I want to say, hey, good day to y'all. It is Wednesday. See, I had to look up at the calendar to tell you what day it was. I had to look up and say, oh, and it's just to me when I look up, oh, it's Wednesday, January 11th. So it is Wednesday, January 11th. It is let's see, how is this day significant? Tomorrow is CPI day. That's how it's significant. CPI, that's a measure of inflation, and everybody is waiting for it. You look at the options chain where yesterday or today, the option chain expected move was set at about 25, 30 points. But tomorrow, it's already set at like 75 points. Option traders are expecting a big move tomorrow. I have to clean my glasses. I can't see anything. These are just reading glasses. I have reading glasses stuck all over the place. I have my real glasses over there somewhere. Still, how does anybody work like this with noise and can't see, can't hear? I have no idea what time or day it is, but all's good. All right, so talking about today's market. There wasn't a whole lot to say in terms of economic reports or big goings on. The market is up a bit. It gapped up and has steadily moved up throughout the day. That's largely in anticipation, I think, of oh, don't say that, JP. It's not an age thing. Yeah, I'm an old fart, but I'm still young at heart. And so anyways, you're getting me off my game here. All right, so the market gapped up. The only thing that I can take from that is they are anticipating or trying to front run a good CPI report. Now, we're heading into a new paradigm that we haven't seen for quite some time, at least for the past few years. where we've been in this kind of world. And opposite world mean this is all to the Fed and the market. Opposite world basically means that when anything good happens in the economy, that is bad for the market. And this worked both during times of quantitative easing and quantitative tightening. Because if it was good for the market, then that meant one of two things. But now, basically, it means that if it's good for the market, then they need to, with the rate hikes, in order to slash inflation. They're under this insane impression that's how you're going to solve inflation, by essentially killing jobs and making it tougher for the average folk to make a living or just live. That's opposite world. Now, of course, if there were bad economic news, then that would be good for the market. And for the opposite reason, because if it were bad economic news, then that would mean that, hey, they're doing their job, jobs are getting squished, we're all under, and that should bring, quote, that should bring inflation down, which is all a bunch of crap. It just does not make any sense whatsoever. But anyways, we're now moving into an era where it seems that the world is starting to go up in of itself, where we're getting back to some form of normalcy, which will not feel normal to everybody because they'll be all confused. Oh, good news is good now and bad news is bad. Of course, then there will be some era of time, some period of time where good news is bad and bad news is also bad. I feel that is really where we're going first before we can get completely to the normal side. Now, unless the CPI numbers come out and they're just fantastic, that could change everything. God only knows. It is so frustrating as an American, as a capitalist, as someone who is freedom-loving and a believer in capitalism and meritocracy. You would hope that the world worked that way. In fact, you would idealize and think that if only the world worked that way, everything would be cool. And that when bad things happen, they get squashed and then they get recycled and then good things replace them, or something that you would hopefully would be good. But it's not that way at all. Everything is manipulated. That's the life that we live, really. And we have to figure out how to live between the cracks that way. And it's in everything, not just the market. It's in everything. Yeah, JP says, don't forget, no news is also bad. That no news is bad, but too much news is also bad. See, that's the other thing. You cannot rely on the news anymore. The news, the mainstream news, it's not news anymore like it was when I was younger. You went to the news for what you thought was credible reporting and journalistic integrity. Today, it's not that at all. It's all about eyeballs. It is a performance. Now, it's also political propaganda. It's just crazy. Now, my wife she doesn't look at it that way at all. She doesn't see that because she's on the right side, the side that the news is on. So she agrees with everything. I'm not really on the other side. I'm more just a realist, capitalist, libertarian, just wants things to be a meritocracy and be what they are, and people be rewarded for good things, not bad things. But that's not our world today. Anyways, I keep on looking over at the market and it just keeps on going up. Now, this is good for me because my trade will benefit from that. So what was I going to talk about today? I talked about the economy, where we're at. We have CPI tomorrow. Next week, we have PPI, which is the companion to the CPI. But CPI, I think, is far more looked upon, where we potentially could have a huge move tomorrow. How do you play that in this Zero-DTE world? That's another thing. Zero-DTE is one of those things that I think is born out of this incredible frustration in the markets. People don't feel comfortable taking longer, spending too much time in the market, and everyone wants to now go back to these short-term deals. Now, the problem with short-term deals is that's most people that day trade lose. So why do they want to go to Zero-DTE? Because Zero-DTE offers something a little extra, an added edge, some wind at your back. You've compressed what was the normal option cycle of, say, monthly options down to weekly. And those weekly options, there are 8 days in those weekly options. And the time decays at an exponential rate. So about 50% of all the premium that's available for that option, it happens in 1 day. 1 day. So that's quite a wind at your back. And so that's a huge edge. So people are gravitating now more towards day trading again because of that. And it's just not retail traders. This is starting to become very popular with institutions And investment houses, proprietary trading firms, they're all gravitating towards this. Zero-DTE is where it's at. The problem is, with that, that extra wind, that extra edge, retail traders are coming at that all the wrong way. They're coming at it the old way of trading, the way that they've perfected, which guarantees that they will be losers. They look at it as, how can I set up a high probability trade to collect all that premium, which is absolutely the wrong way to go about it. Everything should be about probabilities and return, not win rate. So anyways, that's what this service is about. It's showing people how to look at this incredible opportunity, this incredible edge of Zero-DTE, and treat it the way a pro would treat it, and learn how to trade it like a pro would trade it. Wow, look at that. The market's going. Hold on. I got it. Let's see. Can I get it? Hold on. Can you hear the fan in the background? It is so loud. No, I can't get at it. Hold on. Be right back. I had to get my laptop because I have the trade on here. I normally have it on this other computer here, but like I said, I was totally rewiring my workstation here, my video studio, and I didn't get to everything. Okay, we're doing okay. All right, Ernie, that's good. So we'll just put this over to the side like that. You know what I could do? I could bring that online. I don't know how this will work, but let's give it a shot. I don't know if it will look good or not. Yeah, that looks like crap. Doesn't really show up that well. Is there another way to do that? I want to show my trade and then go from there. Let's see. But it doesn't look like I'm going to be able to. I haven't fully set up everything. Once I get everything set up, I'm going to have a multimedia extravaganza. No matter where you look, you'll be able to see something new and different and cool. All right, so we'll just put that aside, and we'll take a look at the old iPad instead, and we'll do a little video lesson. That'll work. Sorry for all shows you how prepared I am. I am not prepared. It's okay. We'll still make it. So today I wanted to talk about the different types of butterflies that there are and why we trade butterflies in Zero-DTE. And what's a potential trade for tomorrow? Now, butterfly is obviously it's what most people know of it as an options trade, right? But butterfly is a term that's been used for quite some time in all kinds of derivatives, including with futures as well. In fact, the butterfly trade was originally with futures, and it's a full trade. It's not really that adjustable because it is what it is. However, its flexibility comes in the variety of ways that you can present it. And really, a butterfly, all it really means is that you have long strikes flanking short strikes. Now, how many long strikes and short strikes do you have? That's where most people are maybe not as knowledgeable, but most look at a butterfly as something symmetrical. So, like, for instance, we have a question right now. Travis is asking, Ernie, do you center your butterfly on the point of control or the largest volume node or both? How about neither? How's that for an answer? So let me just say that the why I like the butterfly isn't so that I can align it with the market structure. Although that sounds like a cool idea. And at first I thought it was a really cool idea. Somebody else just logged into your account with a different device. Oh, that was my laptop. So we need to connect that. That was TradingView telling me that I logged into TradingView with a different device. I don't know why. I pay all this money for TradingView. Why can't I run it on two devices? Yeah, so it's neither, Travis. I'm not lining it up with volume profile, although I am using volume profile and the underlying market structure in how I manage the profits once in a butterfly. Hopefully that satisfies your id. The butterfly, its primary purpose is to manage your risk, to set up an environment where you collect premium. So it's a premium collection device. And unlike a straddle or a strangle, you'd have undefined risk. You have defined risk by flanking it with long strikes. And with that, you can create a butterfly recipe that has fantastic risk to reward characteristics. And that is another tenet of, right, not just Zero-DTE trading, but trading in general, or really it's a tenet in virtually any kind of performance-related endeavor, whether it's financial or whatever, where you're trying to take the smallest possible risk for the largest possible return, right? So that's our number one intent, is to get that risk to reward. Now there's an all risk to reward depending on the size of your account and what you're trading and what's available, etc. But for most people, it's about 1 to 9. It's pretty much the standard. And if you go and talk to some of the old floor traders with butterflies, or even some of the more modern options traders on the floor, the exchanges, they'll all tell you it's 1 to 9. And that's actually something that I've come to find as well in my trading, because all of my trading, regardless of all the different risk to rewards that I took in all of these hundreds and hundreds of trades that I've done with Zero-DTE over the past couple of years, they have all averaged out to 8.8, which is basically 1 to 9, right? So 1 to 9 is like the sweet spot. That's where we start. We don't start with where's the volume profile. I start with, hey, can I put on a good risk to reward? Can I put on a trade where, and quite frankly, the market will tell you where to put those strikes based on whether it's a 1 to 9 risk to reward. Because if I choose a center strike to where to start my butterfly, and then once I start widening it, I can widen it to maybe 15 wide, then 20, 25, whatever. Maybe like I widen it to 25 and I look and the cost is $5. Well, $5 for a 20 wide or a 25 wide spread is not 1 to 9. Nowhere close. What I really need it to be is at $2.50, because $2.50 minus 2,500 would give you 2,250, and 2,250 divided by 250, which is the risk, would give you 1 to 9, right? No. Yes. So anyways, you always want to get your risk, your debit, 1/10 the size of your max, or the width of your fly. That'll give you the 1 to 9 and put you in an optimal position mathematically to give you the best combination of potential reward and the amount of risk that you want to take. You want to take these small risks for potentially large reward. And of course, you'll take any reward that's in between there, the plethora of or spectrum of rewards that are in between your max risk and your max profit. So that's one of the reasons why the butterfly is cool, because you can define these things. The other is that you can collect the premium, and you can collect the premium on the day that you want to collect premium, the expiration day, where it's giving you that premium, that big punch of premium in a very short time frame. So that's why people are gravitating towards DTE, because now it's making day trading easier for a lot of people. The problem is that they're going about it all wrong, completely wrong. They're trying to make everything into a high probability trade. They don't like that 1 to 9 or that asymmetric. That's something that does not compute. They think they're going to go the other way, do a 10 to 1 or a 9 to 1 or 20 to 1 or whatever it is, and spread those wings way out. Don't forget that butterfly. It's not giving me enough. They want to put it around price as if it's a neutral trade, but there's nothing neutral about the market. The market's hardly ever neutral. Would you want to put on a neutral trade for the market with a 72-pointed move? What kind of silliness is that? And you might say, how am I going to put on a butterfly that has even less range? You don't put it around price. You put it outside, out of the money, and you hope that price goes towards it. But what if it goes the other way? Then you put another one over there, forming what we call our classic Batman trade. So that's what you do. So that's the flexibility of the butterfly. The other thing that you can control is how wide you want to make it. And there's even more. It doesn't have to be symmetrical. It could be asymmetrical, just like asymmetrical risk to reward. You could change the closer spread and the further away spread to you when you're putting this trade on, make them different, and that will create what's called a broken wing butterfly. Basically, it looks like a butterfly and you chopped off its wing, I guess. That sounds silly to me, but that's what they call it. They call it a broken wing butterfly. There are other ways that you can do butterflies. Remember, I said a butterfly doesn't necessarily have to be this symmetrical thing. That's just made up. That's what is most popular. And in the futures world, we used to do butterflies all the time, but they were all kinds of different weights. And a lot of times we would do them with a kind of arbitrage in mind and do it with different futures contracts. We would make a butterfly that would consist of the Dow futures with the S&P futures, or the oil futures with the heating oil futures, or whatever. And we would create these elaborate butterflies, but with different weights on the wings and different weights on the shorts. And so that's really real power, I think, of current butterflies, even with options. We can change those. We can create what's called an unbalanced butterfly. Let's see, we got some more. I'm going to get to the comments in a second. So we can create an unbalanced butterfly as well. It doesn't have to be 1-2-1. It could be 1-3-2 or 2-7-4 or whatever combination that floats your boat. And so you would do that in order to create different risk structures and modeling your idea of where the market is showing to where it isn't showing strength. And yes, was it Travis? Yes, Travis, you could even do it to accommodate various market structure elements as well. Although with what we're doing with Zero-DTE, we don't do it quite so much. We're more focused on just the risk to reward. All of these things are possible, which again is pointing to the butterfly as being a supremely flexible mechanism for modeling your idea of the market. All right, now we could go through all of the different variations, which would be really interesting, but it would take a long time. And I'll leave that for next time. Once I have my studio all set up, and when the studio's all set up, then we'll do something a little bit in depth, and I'll do some graphics, and I'll draw, and I'll show you all kinds of things. And then we'll put it up on the website as a free course for you to have for your own. You'll be able to refer to this course anytime you want as either learning material or reference material on how to trade Zero-DTE. Now, will the course by itself teach you how to be a supreme Zero-DTE trader? No, it will not. Sorry to burst your bubble, but it won't. It's great information. And I'm sure that there's people out there that can take that and run with it and create a career around it. But not most people, the vast majority, virtually everybody. That is because it's not the strategy that gets you from point A to point B. And I don't want to even imply that point A to point B is such a short distance. A lot of people think that, hey, give me this and I can start becoming successful. It doesn't work that way. It's like saying, man, give me a bat and a ball and I'll become a professional baseball player. No. Oh, then give me the rule book too. Then I'll know everything about baseball. No, you won't. Oh, man, I really want to become a professional baseball player. Oh, I forgot. I need a glove and cleats. Now I can become a professional baseball. No, not even close. You'd be lucky if you even play some triple D alternative league, never mind a pro. So why would you think it's any different in trading? Just give you the C and all of a sudden you're going to become a success? No way. It just doesn't work that way. Never has, never will. And that's really one of the problems, the bane of the existence of the retail trader. They think that they can read a book, take a course, and boom, they're there. They don't know that it really is all about time and effort, and then the kind of effort that you put in within that time. And you have to spend that time in order to develop the right skill set, the right process, the right self-improvement or continuous improvement process, the iterative nature of it. You need to know the nuance. You need to know all of the analysis, the underlying philosophy, the frameworks. You need to know all of that, and then you need to be able to execute on it. You need to develop that execution skill. It doesn't happen by yourself. It happens when you have a coach. Hence, that's why most teams in sports have a coach, whether they're at the pro level or even at the little league level. They have a coach. Because the players, they can't do it by themselves. Sure, there are some players that excel amongst others and they do well, but still, they still need a coach. Even the best players in the world, they rely on their coach. And it's not just ball. It's virtually everything that has to do with achieving peak performance. You want to be a peak performer, you need a coach. So that's what our service, see, I noticed that very smooth transition into what you think is a lesson for you, but it's really just an ad for Zero-DTE.com. Just kidding. But it's true. Both that it's an ad and what I'm telling you is true. That you need a coach in order to guide you and keep you accountable in that guidance to make sure that you stay on the path to becoming a professional. And that path never ends. It's not like, hey, I go from A to B. No, there is no B. B just keeps on getting down the road, C, D, E, F, and there is no end to that alphabet. So that path is continuous, but you need someone to help you get on that path, stay on that path, and keep you accountable to being on that path. And that's really what our service here is all about. We show you the methods that pros use. We show you the process and the sets that you need to acquire that pros use. We show you how to become a pro. So that's the difference in what we do here and whatever anybody else is doing out there. All right, so now what I'll do is the little roll call. There was a little pullback in the market. Maybe we can take a look at the market and then we'll do the roll call because I'm sure you would much rather see the market while I bring up the different people rather than my face. Oh, semi-shaven too. No, that's not it. We want the secondary display. There we go. All right, so we can see the gap up that we had here in the market right there. And pretty healthy gap. Will that gap get filled? I don't know. Must a gap get filled? No, it does not have. And we gapped up, took a little time, did a little pullback, which is very prototypical. When you have a huge move up, you usually have a grind, then a pullback, then a continuation of trend, and then a grind into the close. So that's what I expect to happen. Very similar to what happened yesterday. We had a move up, a pullback, and then a grind, and then a whoosh into the close yesterday. We'll see if that happens today and makes us all happy. This little line here I put was a break-even point for me on whether to stay into my trade or not. And as long as it moved above there by a certain time frame, which was at noontime, right about here, and it did, I would stay in the trade. And so now it needs to move up, maybe not as fast as I'd like. It would really need to move up to about here to guarantee a profit, right about there, new high. So pretty close. Anyways, that's what that is, and that's what I showed to our group. That was a line of demarcation for me and for a lot of other people that are following what I'm doing. But we encourage everybody within our group to become totally independent traders. That's what a pro organization does. All right. Here we are. We're moving up. I think that we're going to move a little higher. We'll make a new high going into the close. There's not much time. There's only 20 minutes left. So who knows what's going to happen? Maybe we've moved up enough for the market. This is good enough. I don't know. Morning is CPI. Could be that everyone's just giving a little retrospective thinking, do I want to waste any more effort? Do I want to conserve my energy now because tomorrow is the CPI and who knows where that's going to go? Have I moved the market? Have I moved my too far north? Or have I moved it enough? If it's a good CPI, maybe you haven't moved it enough. All right, now we'll go to the roll call. Let's see here. Okay, so we have Travis. Travis, how you doing? Travis, thank you very much. And he's here. Brian, how you doing? Yo. And it's Travis again. We have Max. I'm going to try this. Marius. I probably totally butchered that. I'm sorry if I did. Jay Hen's here. How you doing? And Max Virtual. Nice to see you. All right. And it was Max that gave the comment on the audio thing and then spurred my Mac comments. And JP is claiming that I'm some old fart, but I'm not. Max thinks it's still a lot of resistance. That's probably true. Let's see. We have some more here. Okay, so it was Travis that asked about centering it on the point of control. The point of control is a misnomer in volume profile, as if it has some sort of support and resistance quality. It doesn't. And I'll talk about that at great length in a future episode. I've talked about it many times. We're talking about the volume profile. Let's see. Max says, I did my first butterflies today after finding your channel yesterday. Cool. My mind is blown. Now I need to take the course and learn how to manage the close, expiry, etc. He is not a plant, by the way. I've never met Max, but I'm glad to hear that. All right. I think that you'll enjoy the course tremendously. Here's another comment. When first exploring that 9-to-1 ratio, I like to say 1-to-9, risk to reward. Although you could say reward to risk. I found it easier to get that ratio on the call butterflies and all put butterflies. That ratio on all call butterflies and all put butterflies. Why is that? Really? As opposed to an iron fly, where you had a little bit more difficult time. Why would that be? Because I haven't noticed that. I can put on an iron butterfly. I really don't know, Max. I'll have to look into that, and then I'll get back to you. I don't know why it would be easier to get either a long call fly or a long put fly to get the 9-to-1 rather than trying it on an iron condor. One reason might be that there's extra manipulation that you have to do with when you're putting on an iron fly, because no one actually puts on an iron fly. They usually put on an iron condor, and they don't make those two short strikes the same. They usually make them 5 points apart, or maybe even 1 strike or 2 strikes apart, and then you have to put them together, and then you have to manipulate both sides to make it equidistant. So that might be why, because it just takes a little bit more effort to try to get that 1-to-9 when you have two extra moving parts. That's my guess. Do you think the broken wing repair might work? I'm not really familiar with what the broken wing, quote, repair is. I've heard of repair strategies, but I'm not sure exactly what you're talking about there. Oh, setting a limit order to transform them into a normal fly if the market moves away from you. You could do that. Or you could start now, what you would be doing, setting a limit order to turn them into a normal fly, a limit order. So you're rolling one of the legs, or are you simply adding another spread on top of it to make it an unbalanced fly? You could be doing both. All right. Max says he needs 39.50 today for a perfect hit. I'm rooting for you. Oh, you almost got it. It's French. Yeah, I thought so. horrible at those names. Sorry about that. And let's see, Dietrich Moten. I think it's the first time I've seen Dietrich here. Thank you very much for coming. Welcome. Let's see, Matt. Let's see, Travis is saying, so targeting a 1-to-9 ratio on both sides of the market. Yes, that's exactly what we do. And on the 1-to-9, when we do it on both sides of the market, we call that the Batman trade, because it looks, when you look at the risk graph, it kind of looks like Batman's ears. And when we do the single trade, we also do a 1-to-9. We just treat the Batman trade a little bit differently in terms of risk management. So we don't allow the Batman trade to go to a full loss. We usually get out of that trade halfway between. So in other words, we don't take more than a 50% loss on the Batman. Yeah, buying it cheaper, or yeah, rolling. Rolling in a fly, that's tough. Are you talking about rolling a single or rolling the whole side? Either way, I don't know. I think moving it closer to the short strikes, I see. That's an interesting concept, but I'd have to look at it. It would all depend on what the ending risk to reward is and whether or not you'd receive a credit for doing that. Yeah, okay, the broken side. I see what you're saying. It's a funky name. Yeah, it Demaris. Now, how would you say that in French? Demara. I can't even say it. Forget it. I'm going to butcher it. Some people do that to make an eventual risk-free fly. I get that, all right? A risk-free fly. You can also do a risk-free fly by legging into it. That would be another way. But to say it's risk-free is a misnomer. It's risk-free after you've already taken profit and eliminated your risk. But the trade itself may still have some inherent risk, or you may lose or go down in terms of your unrealized gains from where you are. So it isn't necessarily risk-free. It's basically saying that I started the day at X and I'm not going to go below X. Oh, demare. Ah, thank you very much. I'll never forget that one. I'm assuming that it happened in France means you lived in France as a teenager. And I'm sure I mispronounced that as well. I took French when I was in high school. Was it in high school or junior high? It was a long time ago. That was a long time ago. How long ago was that? When was I in high school? I graduated 44 years ago. Wow. Can you imagine that? I'm coming up on my 45th high school reunion. I don't think they do at this point, they don't do it every 5 years anymore. Now they do it every 10 years. Yeah, I took French. I think it was in 9th grade, so that would be junior high. So that would be 47 years ago. Wow, long time ago. What was my teacher's name? Spillane. Ms. Spillane. Can't believe I read that. Man, I can't even remember what I had for dinner last night. I remembered Ms. Spillane. All right, here we are. It is 3:50. The market, it looks like we're going for that new high. That's exactly what I needed. Let me check I never got to the iPad to show you some cool stuff. Still need to move up pretty significantly in order to completely eliminate. I don't know. It's not bad. Not quite inside the profit tent, but it's not a max loss either, so it's all good. Yeah, that's looking pretty good. All right. So Travis is asking, so on a Batman trade, you close both spreads out if you reach a 50% loss. Usually what happens is that by the time there's a 50% loss, one of the trades will be down near nothing, and the other trade will have 50% of its value left. And sometimes you can just remove one of the trades or one of the flies. You know what? This would be a good opportunity now to go to the iPad. Oh, where's my iPad pencil? It's way over there. Is it over here? I don't know what happened to my iPad pencil. This would be like the third one that I've lost. Oh, there it is. All right. So we'll demonstrate this by going to channel. Let's see, video 4. Hold on. All right, we're on the iPad, and we'll create a risk graph. Oh, that is horrible, Ernie. What is that? We need a different pen. We need, I don't know, a studio pen? How's a studio pen? Oh, that's horrible. We need, why is it like that? We need a gel pen. So I guess the jitter, the fall off, I don't want fall off. Oh, the fall off, that was good. Spacing, oh, stabilization, taper, shape, taper. I don't want taper. Size, opacity. All right. That's getting a little bit better. All this stuff that you can do. It's funny, if you go at an angle, you can get a different look. That's pretty cool. All right, so we'll erase all this. Yeah, I have the wrong pen. Let's see, Mercury. See, it's fading. Why is it doing that? See, I don't know enough about this to be able to do the. I'm sure this isn't what anybody wanted to see. All right, drawing. Little Pine. Why is that different? Oh, look at that. Oh, that's cool. I'm getting closer. Inking. Baskerville. Oh, that's cool. It's like a snake. Mercury. What? Let's see, what else do we have? Inca. Oh, what did I do? Where did I go? Inking. Oh, that's inking. We don't want inking. We want painting. No? We want recent. See, I thought gel pen was the way to go, but the gel pen is, why is it, it's like running out. Oh, if I go sideways, I don't get that as much. All right. I have to find the pen that I had before because it worked great. Anyways, let's say that we're at the money right here and we decide to put a Batman on. And so it looks something like, oh, it's the wrong color. And then the profit curve maybe looks something like, that was horrible. It's forcing me to draw at an angle so I can get a thick line. Anyways, what will happen is that during the day, as this profit curve is going up, it'll go up inside a V like this, but it'll down here, right? So you end up having a curve that looks like that, right? I don't know why it's fading when I draw. Why is that? There must be some kind of ink or luminance or organic or vintage materials, elements, crack textures, airbrush. Maybe it's this. Is that it? Is this it? No, that's opacity. Anyways, when it goes here, let's say that you're right here, right? This side probably went to 0. This side has at least something left so that your total risk is near 50%. I got to figure this out. But maybe right now is not the best time to do it because the market is going nuts. That's the boob trade? No, it's the Batman trade. Come on, do not mock my strategies once you see it. It's Madonna's brassiere. How's that for a visual? All right, let's see. Where am I? Oh, yes, I am profitable. I wish I could show this to you. How can I show this? I know. Will that work? No, that doesn't work. Why doesn't that work? Anyways, I'm profitable right now. I'm in the right ear of the Batman. That's good. I'm going to put that away. I guess what I could show. I know how I can show it to you. We'll fool everybody. We'll fool these until I get everything set up. I'm like running blind. All right. See right there? Price is on right here now on this side of the Batman. See, there's my Batman trade. And yeah, it's in profit now. Didn't we have a profitable trade yesterday, too? At the very end? It says, supposedly a large volume of calls for tomorrow. Pretty cool. I have to figure out this iPad thing, because all of a sudden now, I get this fading. I'm sure from a stick point of view, that fading is cool. But when you're trying to do illustrations, that sucks. Yeah, I got to figure that out. I don't know what I did. Maybe I need to take a lesson on Procreate. The market keeps on going up. Where's Tesla? Tesla's going up. Holy crap. Look at that. So now we're definitely inside of my profit tent. Where's Tesla? Tesla's way up. Look at how high it went today. Wow. I think the market's finally waking up to the fact Tesla's earnings are coming up soon, I think. Let's see. When are the earnings? At the end of January, I believe. What do I have to do? Go to an hourly chart to see it? Yeah, there's earnings right here. Tesla's expecting earnings to be $1.192 per share, with revenue being $25 billion. I think that, oh, look at that. I didn't know you could do this with TradingView. Really cool. Treat TradingView like it's a one-trick pony. Don says, makes me think someone has pre-knowledge of the CPI report. Kind of Dan Aykroyd and Eddie Murphy in Trading Places. Well, that was the Orange Futures report. And who is the undercover guy or the thug? I forgot what his name was. Looking pretty good there. Was it Beasley or Binkman or something like that? The thug in Trading Places. Beeks, Mr. Beeks. I knew it would begin with a B. Thank you, JP. You did? Don says he just watched that movie a week ago. I think I saw it maybe, 10 years ago. I've seen it 10 times, but it's always a great movie. It's one of those movies you can watch over and over again, as are most Eddie Murphy movies and Dan Aykroyd movies. Oh, caught it on Pluto TV. So does Pluto TV have all old shows on it? Do they have the old sitcoms and stuff? That's what I'd like to see. Reminisce back when I used to watch black and white TV. Yep. There was a time. It's free, so yeah, lots of old stuff. Cool. I'll look it up. For all you people that are listening here, there's only a few that will relate to this, but there was a time when, and I was alive during this time, when TV only had 3 channels. It had the 3 major networks and a public access. And that was it. Can you imagine that? 3 channels. And then they added UHF and a few more channels. And my family, I think we were one of the first in our street to have a color TV because my dad built it from a kit. So I'm going to have to check out Pluto TV. I'm sure going down memory lane like that really inspires a lot of people. Hard to imagine that an old fart like me used to watch TV that only had 3 channels on it. And I remember we used to go up when I was younger, in my teens, then we used to vacation with my family up in Maine, up in Bangor. and they had cable. And we thought that was such hot crap. And the cable box was about this big, and it had, I think, 10 buttons on it. And those were the channels, and they were push buttons, like the old push button car radio buttons. You pushed one in and the other one popped out. And that would get you from one channel to the next. That's how you chose your cable channels. Oh, God, yeah. So Jayhen is saying something that I'm sure that nobody really understands what that means. Party lines on the telephone. So the old phone, there were certain lines or certain ways that you could get onto the telephone, and it would be, and everybody else, you could hear everybody else. They would get on as well. And it was kind of like a community channel on the telephone. I don't think it was a feature as much as it was an anomaly of the way that the system worked. But there was also a time when I was younger, if you wanted to dial that was outside your area, and when I mean outside your area, maybe 10 or 15 miles away, that was outside your area. In order to reach them, you had to connect with the operator and ask the operator to connect you. I know, that is mind-blowing considering where we are. And let's see. See, when I get into this reminiscing stuff, I can't stop, and I'm really... We also had independent TV channel. That is where we all watched Ultraman, Speed Racer, and Lost in Space after school. Those were all late 60s, early 70s shows. They were originally all in black and white, believe it or not. I never saw Ultraman. I don't know what Ultraman is, but Speed Racer. Go Speed Racer, go Speed Racer, go Speed Racer, go! And he was always fighting with his nemesis, Racer X. Yeah, most people have no idea what the hell I'm talking about. TV was very cool. The earliest memory that I have of TV was when I was 3 years old, 4 years old, and my cartoons, and then my mother ran into the room. My cartoons went off the air, and then there was all this commotion and news flash or whatever. I didn't know what it was. And my mother, I distinctly remember what she was wearing. If you ever watched Leave It to Beaver, and the mom, when she had an apron on and she was wearing a skirt while she was washing dishes, and her hair was all made up and makeup on and the whole thing. And that was what a mom did at home, right? She was all dolled up with the skirt and the apron and bow in her hair, the whole thing. My mother runs in to the TV room yelling, "The president was shot! The president was shot!" I can still remember that. I was watching my black and white TV. The TV was a turquoise blue plastic sitting on a black wire frame with wheels so that we could wheel it out to the living room and watch our favorite shows while we were eating. It had rabbit ears! Holy crap. Is the market almost done? It's done. Oh, I'm sorry. I talked right through it. Yeah, TV. Those were real TV dinners. That was before frozen TV dinners. And then that became such a thing, and the mom was, I don't know why it became a thing that they had to create the frozen TV dinners for that one event. That would be a good question. What was the shift that the mom no longer wanted to cook while everyone was sitting at dinner on TV? She just was maybe getting disgusted with the whole deal and just wanted to throw something in the oven and then just plop it up on the table. Of course, very few people had waves back then, so you didn't pop it into the microwave. Yep. All right, so I missed all the action. The question is, was I profitable? I think I was profitable. Yes, I was profitable. So yesterday I was profitable too. Very cool. So I made about, if you count both of the trades, they had a total of 50 cents. I made 67 cents. So I made about 110%. So not bad. Yesterday I made about 70%. So that's pretty much average for most of our returns, about between 50 and 150%. All right, so I'm done now. I want to thank everybody for showing up. Thank you very much. I'm sorry I hung over. I didn't even note. See, I didn't even notice my laptop didn't ding ding like it usually does. I would know that the market came to an end. Instead, I just started talking. The wife's calling. That means she wants me to go walk the dogs. I'm done. See y'all. Peace. The wife is calling.